Alright, hello and welcome to Camel Finance. I'm your boy Camel, and we still appear to be in this Goldilocks zone. Remember, when we come from high inflation towards deflation, there's this period in the middle where things don't look so bad. The inflation in the US is coming off, and we are now well inside of a 2 handle for US CPI. The story is not the same in the UK. I'm going to briefly touch on the UK inflation. It's really bad in the UK, as you can see. And whilst food price inflation seems to have peaked, overall shop price has risen by 9% year over year. So this is likely going to lead to at least 4 more rate hikes in the UK, and we could well see the terminal rate at around 5.5%. The thing that is possibly concerning for the people in the UK here is that, do you remember not long ago when the hike in interest rates caused the UK pension and insurance companies to get margin called, and they needed a $65 billion bailout in the middle of a rate hiking cycle? So the question is, are the pension funds going to be able to withstand another 4 rate hikes here in the UK? You can pause your screen and take a good look at this if you want to. But the story in the US is a lot different. The melt up continues to play out, albeit somewhat with weak breadth. You can see this melt up is being confirmed by only 8 NASDAQ stocks making 52-week highs and only 3 mega caps making all-time highs. So if this melt up is going to continue, we really need to see breadth improve here. It doesn't mean that we're going to roll over from this level. Of course, we could indeed see a spike. If this rally is going to continue, then we are going to need to see more stocks participate in this rally. Of course, the big news over the weekend was that we had a debt ceiling resolution, and they have indeed raised the debt ceiling by another $4 trillion. But do you remember what happened after the suspension of the debt ceiling limit in 2019? A huge amount of money was needed by the US Treasury, which led to repo crisis within just weeks. We may well be in this very situation at the moment. As the US Treasury is going to start to pull liquidity from the market, we could well see a pullback. And frankly, we'll get to the charts in a bit, but the charts look like they are due for a little bit of a pullback. However, in 2019, remember, the reduction of liquidity was very short-lived. It only lasted around 4 weeks before the Fed had to step in and start an emergency QE program. That is, of course, printing money to prop up the markets. And of course, very good things happened to the markets walking forward thereafter. The bank discount window borrowing and the BTFP program are both on the rise. So you can see here the discount window spiking massively. And we also have the bank term funding program on the increase. So there are multiple forces at play at the same time. Whilst we have some forces like the Treasury removing liquidity from the market, we also have the BTFP increasing liquidity in the market. And like I said before, history tells us we should be open to seeing QE in the not too distant future. All the way up, we're going to hear narratives about irrational exuberance. But just remember what happened in 1996. The current Fed chair at the time, Alan Greenspan, said the market was in irrational exuberance, and the Nasdaq proceeded to rally for 4 more years, more than doubling after he made that speech. So you know, the whole way up here as we were making new highs, there would have been people saying we are at record overbought levels, this cannot be continued, this cannot be sustained, and yet the market continued to make new highs. This is why it's important to use trend lines, to use technical analysis to tell you when to exit the market. And unless we get a technical breakdown like here or like here, there is no actual reason, technically speaking, to exit the market. So it's important not to get married to these ideas. It's important to use the TA and the trendline breaks to tell us when it's time to actually exit the market. Nvidia short sellers are down 4.1 billion in mark-to-market losses since May 24th. So it just goes to show there's no point trying to be a hero. There's no point trying to pick the top, because these are irrational markets, and markets can remain irrational for longer than we can remain solvent. Over in the world of Bitcoin, the whales continue their strong accumulation. Whales are not selling right now. They are buying, and they are buying heavily. We also have the hash rate and the Bitcoin difficulty spiking to new highs. And all of this comes at a time when, for the first time ever, the Bitcoin network has dropped below 300 grams per kilowatt hour of emissions. It's taken just over 3 years for Bitcoin to halve its emission intensity. No other industry is reducing its emission intensity at this rate. And did you know if you price Bitcoin in oil, Bitcoin is currently trading at 306 barrels per Bitcoin. Bitcoin continues to function as the ultimate store of value. One major objection to Bitcoin has always been that its adoption is dependent on internet access. For example, 43% of Africa's 1.5 billion population do not have internet access. But all that is being changed, as now anyone can send and receive Bitcoin with just a phone number. You text a number to get a lightning address, you use prompts to set up payment wallet and username, you use the country code to send the sats, and this is now available in 8 countries in Africa. So there you have it. You can use Bitcoin on any phone, whether it is connected to the internet or not. Just before we get into the charts, I posted this yesterday. I said, look, Ripple XRP, my original idea, the green squiggle, seems invalidated. So I said I'm long XRP here, and you can see if we hop into the charts, we have indeed broken out. Now this would have likely been a better entry, but I was always concerned that we had this overhead level here of resistance. We have since cracked through that. This was the trigger for my long as of yesterday. Now, I personally, it's weird for me to say this probably since I'm long, but I personally am still hoping that we're going to get this rollover and a much better entry from lower down. I think this will be a much better trade. But if the chart is going to just continue to break out, then we want to have some exposure. So I added a long on XRP as per the tweet yesterday. You can see here Bitcoin briefly spiking above this downward sloping blue resistance line and so far getting rejected. So it'll be interesting to see if we do indeed get a true rejection here and a rollover, or whether this is just a quick trap before we do break out and move higher. That of course is to be determined, but for now we continue to push this position. Ethereum looks a lot better. Currently working on breakout retest and hopefully looking for that resumption higher. So this will be a good tell. If Ethereum can indeed push off of this resistance line, then it's likely that Bitcoin will of course follow. The Dixie continues to push up here, so I would say we certainly have a confirmed breakout at this point. I'm just noticing if I extend this blue trend line, something like this, I wonder if that is where we end up running into. I wonder if we come up here, get rejected at resistance and roll over, or whether we're just going to enter this weird time where risk rallies and so does the dollar. So it should be quite interesting to see how this plays out. The 10-year yield, the chart of truth, so far rejected at resistance, didn't even quite make it all the way up there. So this should allow risk to come on, of course. TLT, did you buy at support with a stop just below? If so, this looks like it could possibly be a decent entry. Looks like we had to pay a stop on IPX, so it is what it is. That's what stops are for. And of course, as I always say, they are not a problem so long as you keep the total risk to 1 to 2% of your total account. Apple, on the other hand, continues to be a super performing stock, so continues to be pushing up to new highs, a mere 2.9% away from its current all-time high. And of course, if we can get above that, it's reasonable to expect us to enter a massive parabolic advance like we've just seen in Nvidia. So we're long and strong, we continue to push. S&P 500 seems like it's working its way towards a new daily cycle. So again, not much more to say about that apart from long and strong continue to push, and we'll see what the market can give. Here's the Nasdaq. Nasdaq looks indeed like a melt up. So it's probably getting a bit overextended here, but just as I was sort of alluding to earlier with the Nvidia short sellers, you don't want to be trying to be a hero here. You don't want to be saying, well, I'm going short. There's no reason to be short, at least until we get a technical breakdown of this yellow upward sloping support line. And even if we do get a technical breakdown of that yellow one, you can see the red one sits just below. So for me, I would want to be anywhere near shorts until we at least lost this upward sloping yellow support line. And preferably for me, I wouldn't want to be near shorts until we lost the upward sloping red support line. Certainly I'm open to seeing some kind of pullback, something like this before we can go again. And like I said, I wouldn't be surprised if we got something like this before we could go again. But all the while we're above there, then there's no reason, technically speaking, to exit the trade. Dow Jones, still sideways, isn't it? Still very, very sideways, so not much going on here. I think for me, the next trade will come from a break above this blue overhead box, as you can see here, if we can do that. So for me, sidelined for the Dow for now. The VIX is still grinding around the high teens, so we need to see this break down if we're going to get a true melt up. We have to be open to some spikes in the meantime as we get the pullbacks in the equities that seem like they should come, but of course they don't have to come. Markets can of course remain irrational for extended periods of time. And lastly, the crypto related equities. Coinbase still kind of sideways, isn't it? MicroStrategy doing a lot better. Had a little breakout attempt, but it failed. So is it going to have to consolidate under resistance before it can go? Quite possibly. But if Bitcoin can get going, then I would expect this to work out as well. Riot as well, truly broken out now, so we'll see what we can get from Riot. We'll just keep pushing this and see what the market can give. And Marathon still kind of sideways, isn't it? So not much more to say about that. So it looks to be possibly a slow week ahead. Have to be open to seeing the equities pull back. Have to see what Bitcoin does, because Bitcoin still hasn't made a true decision on its direction. But overall, things don't look too bad. I personally wouldn't be sweating pullbacks. If we get pullbacks here, I think they will become opportunities to add. But as ever, we enter the rest of this week with a flexible, unbiased and open mind. No emotions, and we see what the market can give. I'm your boy Camel. In the meantime, take care from me. All the best. Cheers. Bye.